So where's the money in real estate right now? With high housing prices and high interest rates, it really might seem impossible to make any money in real estate right now. Now, fortunately, that's not completely the case because there are always ways to make money in real estate, no matter what the market is looking like. Now, the lowest hanging fruit is typically the best place to start, right? Especially when it comes to a market that looks like ours right now. So what is it that's the lowest hanging fruit, you might ask? Well, it's undervalued properties, even with housing prices high overall. So there are still undervalued properties out there, believe it or not. You just have to be willing to do the work in order to locate them. So in today's video, what we're going to do is be diving into everything you need to know about undervalued properties. Make sure you stick around to the end. So welcome back to the VIP Financial Education YouTube channel, everybody. Certainly appreciate you being here. We teach you how to go further, faster financially. Make sure you're a subscriber. If you weren't one coming into today's video, we provide a ton of great information. Now, like I said at the top of the episode, we're going to be diving into everything you need to know when it comes to locating undervalued properties so that you can make big returns inside our current real estate market. Let's go ahead and dive into the 5 most important aspects to consider when looking for undervalued properties. Number 1 is going to be understanding the market. You've got to understand the local real estate market, and that's crucial in identifying undervalued properties. So keep track of local housing trends to get a sense of where the market is headed. That includes tracking the number of homes that are for sale, median home prices, average time that the homes have been sitting on the market, and you're going to analyze the rental market by tracking rental rates as well as vacancy rates and the average time that rental properties are on the market. This will give you a sense of demand for rental properties in that area. You're also going to look at the local employment rate, and you really want to track the trends in the job market there. An area with a strong job market and employment growth can drive demand for housing, and then it can support appreciation over the long run. A strong local economy is typically going to mean a strong local real estate market as well. So be sure to check out different neighborhoods within the local market to identify areas that are undervalued. And then look for neighborhoods with a growing population, a strong school system, low crime rates, easy to access amenities such as shopping, restaurants, entertainment. Zoning laws are also another thing that you're going to want to be informed about. Understanding the zoning laws in a specific area can help you understand what types of properties can be built and where. So this will help you identify potential investment opportunities and avoid areas with limited growth potential. All right, the second item on this top 5 list is to locate distressed properties. And these types of properties can really be a great opportunity for real estate investors to find undervalued properties that have the potential for appreciation. Types of distressed properties include foreclosures, short sale properties, probate sales, properties in need of significant repairs, tax liens, bank-owned properties. Foreclosed properties are homes that are repossessed by the banks or other lenders when the owner of that property defaults on their mortgage. Foreclosed properties can be found on real estate websites, at local auctions, or through real estate agents who specialize in that type of property type. Short sales actually occur when a property owner owes more on their mortgage than the property is worth, and the lender actually agrees to accept a lower sale price in order to avoid foreclosure. Short sales can be found on real estate websites or through real estate agents who specialize in short sales. There were a lot of those back in 2008. I expect more to come. Now, probate sales occur when a property owner passes away and then their property is actually sold to settle their estate. These properties can be found through public records or through real estate agents that specialize in probate sales. Properties that are in need of significant repairs can be purchased at a steep discount, affording you the opportunity to then reap the rewards if you want to go in there and tackle the actual rehabilitation of the property. So look for properties that need cosmetic repairs or those that actually require more extensive renovations. And these properties can be found on real estate websites, through local real estate agents or specialists. Even people on this channel that we've been bringing on recently have access to these types of properties. Tax liens occur when property owners actually fail to pay their property taxes, and then the local government places a lien on the property. Investors can actually purchase that tax lien and receive interest payments until the lien is repaid, or they might even be able to acquire the property through a foreclosure sale themselves. And when looking for distressed properties, it's important to carefully evaluate the potential returns and the risks. Consider the potential rental income that you might be able to get or the resale value if you fix it up, as well as any other potential costs that would be associated with those repairs, renovations, as well as the cost of holding the financing. Those are called carrying costs. All right, undervalued property type number 3 is up and coming neighborhoods. Now, if you're able to look into up and coming areas in order to find undervalued properties, that could be a really great way to identify potential for appreciation. And here are some of the key factors to consider when looking for these types of neighborhoods. First, location is going to be everything. Look for neighborhoods that are located near major employment centers, public transportation, other amenities such as shopping, restaurants, entertainment. These factors can help attract tenants and future buyers, which can ultimately support property values over the long run. Second, I want you to research any planned or ongoing development in that area. And this could include new commercial or residential construction. This could include public transportation in the area. This could include improvements to public transportation or infrastructure projects. These developments can increase the value of properties in the area. And then finally, you're going to want to consider the quality of the school district in that location. So look for neighborhoods that have a strong school district. This can be a great key selling point for families that have children or want to have children, and then can help support property values over the long run. Now, fourth, check the crime rates in the area. Look for neighborhoods that have lower crime rates, as these areas are going to tend to be a lot more desirable, and they can support property values because people are obviously drawn to safe places. And the last one is to consider the level of community involvement in the neighborhood. Look for neighborhoods that have an active community, such as neighborhood associations or community events. And this can actually help create a sense of community and make the neighborhood a more desirable place to live. All right, so undervalued property type number 4 on this list out of 5, that is, are motivated sellers. And motivated sellers might be willing to sell at a discount in order to move quickly or to avoid foreclosures. I see this all over YouTube and the internet. People are following this approach. And when you check for motivated sellers, it can be a really great way to find properties that have the potential for appreciation. What you're going to want to do is look for properties that have been on the market for an extended period of time. These owners might be more motivated to sell, and then they may be more willing to negotiate on their prices. Next, you're going to want to consider owners that are facing financial difficulties themselves, like a foreclosure or maybe a bankruptcy. These owners are also possibly more willing and motivated to sell quickly in order to avoid any financial hardship that they're looking at down the road. Another factor to consider here is an owner that might be going through major life events like a divorce or a job loss. These owners might also be motivated to sell quickly in order to move on with their lives, or they have to relocate for work. Expired listings is a really great way to find motivated sellers too. And these are owners that could be more willing to negotiate on the price because their listing obviously didn't go according to plan. Last is to consider for sale by owner or FSBO properties, which are properties that are being sold by the owners themselves without the assistance of a real estate professional. These owners may be more motivated too. They might be more willing to negotiate on the price because they're not paying out on certain commissions that would be involved otherwise. So check into all those. Now, undervalued property type number 5 on my list here is off-market properties. Off-market properties are those properties that are not listed on the open market, but they might be available at a discount. Building a great network of real estate professionals has always been something that I've done. You can join your local real estate investment association to meet these folks. This includes agents, investors, property managers, etc. And they can help you find off-market properties a lot more easily. And a lot of them are not even listed publicly. Another great idea is sending direct mail to the property owners in your target area. And that can also help you find off-market properties that might be available for sale. And this can be a time-consuming process, but it can also be an effective way to find motivated sellers. Some real estate websites offer databases of off-market properties that aren't listed publicly. These properties might be available for sale, or they might be pre-foreclosure or probate properties. Public records can be another great source of information. Here's another idea, lastly, is to contact real estate wholesalers in your target area. And they can help you find off-market properties that are not listed publicly as well. These types of wholesalers, they're investors too, and they specialize in finding these off-market deals, and then they sell them to another investor like you for a profit. So they're gonna make a little bit off the top and turn it over to you to do the work on the property. So that's really an overarching summary of these. If you've paid attention to our list, then you'll likely notice a trend. Your network really matters a lot. So whether it's being plugged into various types of real estate agents or wholesalers or lenders, it is critical for you to build up your network. And if you wish to be the first to see the types of deals that can make you the most money in real estate right now, click the link at the top of your screen. I'm going to throw it up here as well, just to watch a video on how you can make passive returns in today's real estate market and really be tag teaming with your lender who's in charge of kind of the sweat equity and swinging the hammer on the property. Don't forget to like and subscribe. It certainly helps us a lot. Until we see you on the next video, make it a great day today, and most importantly, keep on cash flowing. Take care.